The story of modern India is one of relentless forward motion. Gleaming metros, sprawling expressways, and tech parks buzzing with ambition. India's economic engine has been outpacing every major economy, climbing the global ladder and earning a spot among the world's top 5. But suddenly, a headline broke the momentum. India slipped in the global rankings. How could the fastest-growing major economy fall behind? Was the growth story an illusion? The answer lies not in failure, but in perspective, specifically how the world measures economic power. This isn't about a faltering engine, but about the ruler used to measure its speed. The slip in ranking is a lesson in the power of currency, not a sign of economic weakness. To understand India's true position, we must look beyond the headlines and into the mechanics of global economics. The real story is hidden in the data, waiting to be uncovered. The IMF announced India slipped to 6th place, overtaken by Germany in global GDP rankings. Germany's GDP hit $4.3 trillion, India's just under $4.1 trillion. These rankings shape investment and global influence, but they're based on GDP converted to US dollars, so exchange rates matter. India's slip wasn't a crisis, but a result of currency fluctuations. India's growth is real. The ranking shift is about exchange rates, not fundamentals. Despite the ranking slip, India's economic momentum is undeniable. With growth rates exceeding 7%, India is the world's fastest-growing major economy. Infrastructure is booming. New airports, highways, and manufacturing hubs are transforming the landscape. The Make in India initiative is fueling domestic production and job creation. Meanwhile, a digital revolution is underway, with startups and tech giants driving innovation in AI, fintech, and more. Cities like Bengaluru and Mumbai are now global centers of entrepreneurship. This blend of infrastructure, manufacturing, and digital growth creates a virtuous cycle: more jobs, higher incomes, and a robust domestic market. India's economic strength is rooted in real progress, not just numbers on a chart. The slip in ranking is a statistical blip, not a reflection of India's true trajectory. The real story is one of resilience, diversification, and relentless forward motion. India's powerhouse economy is building for the future. So why did India's ranking fall despite rapid growth? The answer: currency markets. Global GDP rankings are calculated in US dollars, so India's rupee-based output must be converted at the current exchange rate. If the rupee weakens against the dollar, India's GDP appears smaller, even if nothing changes on the ground. Over the past year, the rupee depreciated while the dollar strengthened, driven by US interest rate hikes. This meant India's real economic gains were offset by currency losses in dollar terms. Imagine the same factories, the same output, but a weaker rupee makes the economy look smaller internationally. This is not a verdict on India's performance, but a quirk of global finance. Many emerging markets face similar challenges as the dollar surged. The real and dollar economies told different stories. India's growth was real. The ranking slip was a statistical illusion. Currency fluctuations, not economic fundamentals, drove the change. The lesson: don't confuse exchange rates with economic health. The real economy is what matters. To understand the shift, compare India and Germany, two very different economies. India is a high-growth emerging market powered by domestic consumption and a young population. Germany is a mature, export-driven economy with a stable currency, the euro. Germany's slower growth is offset by the euro's strength, shielding its GDP from dollar volatility. Much of Germany's output is already priced in global currencies, making its GDP less sensitive to exchange rates. India's economy, mostly in rupees, is highly exposed to currency swings. When the rupee weakens, India's global ranking drops, even if its real economy is booming. This isn't a pure measure of dynamism, but a blend of growth and currency strength. Germany's rise is about currency stability. India's slip is about vulnerability to exchange rates. It's a race between a fast-growing sprinter and a steady marathoner, with the finish line constantly moving. The rankings reflect currency games, not just economic reality. India's story unfolds amid global turbulence, slowing growth, inflation, and geopolitical tensions. Central banks worldwide have raised interest rates, strengthening the dollar and slowing economies everywhere. The Ukraine conflict and US-China rivalry have disrupted markets and supply chains. Despite these headwinds, India's growth stands out. Its large domestic market and proactive policies have kept momentum strong. The ranking slip is a side effect of global forces, not a sign of weakness. India's resilience is the real headline. In the global arena, India's position is unique. The US is massive but slow-growing. China, once the growth leader, is now slowing amid structural challenges. India, with over 7% growth, is outpacing both and driving global momentum. Investors and businesses see India as the next big opportunity: a young population, rising middle class, and reform-minded government. The contrast is clear. The US is large but steady, China is large but cooling, and India is both large and fast. The GDP ranking slip is a temporary distraction. The real story is India's unmatched growth and future potential. In the global race, India is setting the pace. The world's economic future will be shaped by India's momentum. The numbers may fluctuate, but the direction is clear. India is the new engine of global growth. The future belongs to those who move fastest. Looking past short-term currency swings, India's long-term trajectory is upward. Experts agree. India is on track to become one of the world's top 3 economies within a decade. Sustained 7% growth means India's economy could double every 10 years, quickly overtaking slower-growing rivals like Germany and Japan. Demographics are a key driver. India's young, growing workforce is a powerful engine. Ongoing reforms and infrastructure investment are making the economy more competitive and attractive to investors. The recent slip to 6th place is a minor bump on a long road to the top. As India's economy matures, its currency will likely stabilize, reducing future volatility. The question isn't if India will reach the top 3, but when. The future global economy will be defined by the US, China, and India. In the end, a country's strength isn't defined by a single ranking or a fleeting headline. India's slip from 5th to 6th was a product of currency markets, not a reflection of real progress. The true measure is sustained growth, innovation, and improving lives. India's economy is creating jobs, building infrastructure, and fostering world-class technology. For ordinary citizens, real growth matters more than global rankings. The focus should remain on fundamentals: education, healthcare, and opportunity. The dip in ranking was a statistical illusion. The underlying reality is robust and dynamic. India's future is being built day by day, powered by relentless growth and optimism.